Most new traders lose money in the market, not because they don't find good stocks, but because they can't read the language of the market. That's right, candlesticks, chart talk. That's right, yo. In this video today, what we're gonna do is we're gonna help you understand who's winning, who's losing. Is it the buyers? Is it the sellers? Who's getting exhausted? Who's taking control? Once you start understanding these little small concepts and nuances, this is going to take your whole investing and trading game to another level, because the candlesticks become soldiers on the chart, which is the battlefield. And so in the next 10 minutes of this video, I'm not only going to help you understand that, but at the end of the video, I'm going to let you see it. I'm going to break down one candlestick pattern that the pros go to, that the greats go to, that the money go to. So I need you to stick around for that. What's good, man? It's your boy, the Wall Street Trapper, man. My goal is to help you build wealth one share at a time. So I need you to like and subscribe. This one right here. Also, I need you to get your pen and your pad, because once we break this down to you, I promise you, you will not see charting the same. Let's go. Every candlestick, we told you, is like a battleground, right? And inside that battleground, you're going to have buyers and you're going to have sellers. The goal is to dominate. Now, sometimes the buyers and the sellers fight to a stalemate, and then you'll get a certain type of candle. Sometimes the buyers take full control and you get a certain kind of candle. Sometimes the sellers take full control. You get a different type of candle. We're going to break all that down for you. But these are the nuances that happens within one specific, what's called a time frame. Now, this time frame tells us how long a fight took to go on. So it can be a 1 minute, it can be a 5 minute, it can be a 30 minute, it can be a 1 hour, it can be a 4 hour, it can be a week. It can be a week, it can be a day, it could be a month. So first off, we got to understand something. Every candlestick will represent one of those. Now, what do I mean? Depending on the type of trader that you are, you'll fight on a certain time frame. Let me even make that make sense. In the amateurs, they fight 3 to 5 rounds. But then when they get a little better, they may fight 8 rounds. And then you may fight 10 rounds. Then there may be 12 rounds. But remember, back in the day, it used to be 15 rounds, right? So think about it as that. So every time frame represents a round that's being fought throughout a day. All right? Now, before we go any further into this, I want you to understand something. Every candlestick is going to have these 4 components. It's going to have an open, it's going to have a close, it's going to have a high, it's going to have a low. What matters is what happens inside the candlestick that really tells us the story. But let's just start right here. First, we're going to look at a red candle. Now, a red candle, out the gate, we know that this is a candle that is telling us that who's in control? The sellers are in control, right? Well, let's talk about that. All red candles open at the top. This is the open. This is the top of the candle. Now, I know what you're thinking. Trap, I see that little leg up there, that little wick up there. We're going to talk about that. But every red candle opens at the top. So right here, you see me have $10. So this candlestick open, let's say it's on a 1 hour time frame. So if it's on a 1 hour time frame, it opened at $10. Now, here's what happens. Because it's red, we know it went down. But at some point, you see this wick, you like, Trap, why is that wick right there? Well, here's what the wicks tell us. The upper wicks tell us that at some point, buyers pushed it up to a certain point and then got rejected. Well, with the wick at the bottom, it tells us sellers pushed it down to a certain point and then got rejected. Well, what does the rejection mean? The rejection tells us that the opposite party took over. So the buyers pushed this down, the sellers pushed this down, and then the buyers stepped in right here and said, nah, that's low enough. The sellers, the buyers pushed this up high, and then the sellers came in and said, that's far enough. But because the candle closed red, we know for a fact that the sellers controlled this round. So let's walk through this and see what it looks like. It opened at $10. At some point, it went up, and then the sellers pushed it back down all the way to this low point, and then the buyers stepped in and it closed right here at $8. So in 1 hour, this stock price went through, this candle shows us that this stock went through multiple emotions, but it opened at $8 and it closed at $10. If you can just start seeing that on your chart, that'll help you out. But let's go a little further. Let's really make it make sense so we can identify things that we need to know about a red candle. One, red candles are bearish. Now, we'll get into the nuance of it's a red candle that's bearish, but it's actually bullish. We'll get into that later, but right now, we're going to talk about this. Red candles are bearish. So if you understand that, that means sellers are in control. Next, all red candles open from the top. Why do we know that? Because bear pushes down. So the red candles open here and then the price gets pushed down, right? So open from the top. Next, a red candle with no lower wick means there's no buyer resistance. Now that's going to be interesting for you to see. Watch this. So we already stated what? We stated that if a candle is red and it comes all the way down and then it stops, that tells us that buyers stepped in. So that's what this wick means. The buyers pushed it back up. So that means it came down. Remember, this one was at $8. They pushed it down. Bears tried to push it down. And then the buyers did what's called, they absorbed all the selling pressure and pushed it back up, which means it probably went down to about $6. But because the buyers pushed it back up, it wound up closing here at $8. Does that make sense? Right? We tapping in right here. We really locking in right here. These are simple, yet this is the language of the market. The candles are the money language of the markets. And once we understand the money language, then we can start understanding the story. Once we understand it with 2 candles side by side, 3 candles side by side, standing on side each other, now we get a story. And once we can unfold the story, we can then start making money, right? Let's go a little further. So then we have a green candle. Now, green candles are opposite. Green candles open from the bottom and they close at the top because buyers are pushing the price up. Remember, sellers are pushing the price down, so it opens at the top, closes at the bottom. Buyers are pushing the price up, so they do what? Open at the bottom, close at the top. What do I mean by close? Remember, there's a session. Every session has a certain time period or time frame. So a candle has 1 hour, 2 hour, 4 hour, 1 day, 1 week, 1 month, 15 minutes, 30 minutes, whatever your preference is, whatever you set that time frame on, a candle has that amount of time to take formation. In that formation, the buyers or sellers give us a story on what that price did, which is called price action. Price action is simply what is the price doing within the time frame that is suggested. So who's winning, buyers or sellers? So let's look at this. What is the price action? The candle opened at $8. It got pushed down here somewhere, right? So it opened at 8. It got pushed down, and then the buyers stepped up, absorbed all that, and then pushed the price all the way up to about, let's say, $12. But then the sellers rejected it, and it closed at $10. So in 1 hour, the price opened at $8. It got pushed down. Let's say this was $6. The buyers absorbed that, meaning they took all that and said, nope, this is enough. And then they pushed the price all the way back up to $12. And the seller said, nope, that's enough, and it closed at $10, right? So that tells us that buyers are in control. This is called the body. The body also is important because it tells us, based on size, who's really in control. All right, so let's go. And I want to make that make sense to you as you're looking at this, right? So watch this. What if you had this, right? You know, it opened here. You know, it opened here, closed here, got pushed up here, got pushed down here. But it's red. right? So this can be signaled as like a spinning top, or this can tell you that, yeah, buyers or sellers didn't really take full control, but it's red. So that tells us that the sellers have a what? An edge. So it can come out so many different ways, y'all. It can come out so many different ways. But here's what this green candle tells us, that the buyers are present, just as the red candle tells us that the sellers are present, right? Now, let's dig deeper into this, because I want you to see them side by side so you can understand what's really going on, right? Here's the thing that you need to know and need to understand as an investor, as a trader, right? So green candles are bullish. That means bullish price action, which also tells us they always open from the bottom to go up, and no wick at the top tells us that there's no seller resistance. Now, Trap, you said that before, but now make it make sense to me, Trap. Right? So if you see a candle that does this, it opened here, it got pushed down here, then got rejected, but then just goes straight up with no wick at the top, that means buyers are in full control. And if the next candle, is a good chance that the next candle gonna be something like this. What's called a candle over candle. And the reason why we know that is because if there's no resistance right here, meaning there's no wick, right? A wick means that it got rejected and then it closed somewhere. So this would tell us the price came all the way up to this and then it got rejected up here, so it closed right here. Well, when you don't see no wick right there, that tells you completely that the buyers bought everything out of there. And so that means the next candle probably gonna be another green candle. Now, let's put them side by side so we can see exactly what's going on, right? So green candle, what do you see? You see it opened at $5. The lowest price, LP, got pushed to $3, but it got up to $12 but closed at $10, right? So that tells us it opened at $5. So it started off as a red candle. It opened up at $5. It got pushed down to $3. But then the buyers did what's called rejected it and then absorbed it. Mean not only did they reject it, they didn't just reject it and stop it. They rejected and then pushed the price all the way up to $12. And then at $12, it got what? Rejected, and it stopped at $10. So that's how we know that. Sellers, completely opposite. It opened at $10, got pushed up to $12, so I mean this was initially green, and then got pushed all the way down to $3, got rejected and closed at $5. If we can understand the story of the candles, right, because they're telling us a story about what's going on, we can actually play this game. I'll show you one single candle pattern that can truly help you out, and this is going to be called an engulfing pattern. And if you can find this anywhere on the chart, this is a strong that someone else has took over. So watch this. Let's say you got a green candle. May look like this, right? So this tells us, this is a buyer's candle. Buyers are in. But if that candle get met with something like this, this is an engulfing candle. And the reason why we know this for a fact is because this whole candle broke the high and the low of the previous green candle. It took full control of it and then it surpassed it. So let's say it opened here. This is what we know. It opened here. So one, it opened above the previous candle's high. Interesting. Look what I said. It opened above the previous candle's high and it pushed lower than the previous candle's low. So that engulfing pattern tells us that is a lot of selling pressure, right? Let's look at it on the other side. What if it was the other way around, right? Well, Trap, you're saying that one way, but what is the other way around? So let's say you had a seller's candle, a red candle, right? And that red candle, had the same, right? And then it came with a That candle has now broke the previous candle's high and low. It broke the previous candle's high and the previous candle's low and engulfed it fully. This is a powerful signal that the trend is about to change or the next candle is about to change. So if you see an engulfing pattern, that tells us now that the opposite color candle has now taken full control or taken control of the next session or about to take control of the next session. So you see this is one of them candle patterns that when the big dogs see this engulfing pattern, they know it's time to make some money. Look, man, it's your boy, the Wall Street Chopper. I hope that this video truly helped you. I hope this video truly helped you see the charts the same. Go back, look it over again so you can really dial into it. And let us know in the comments how we can truly help you more, how we can truly serve you more when it comes to trading, investing, and really just understanding the language of the charts.